Good day, and welcome to Nova's third quarter 2021 results. Today's conference is being recorded. At this time, I would like to turn the conference over to Miri Segal, CEO of MS-IR. Please go ahead.
Thank you, operator, and good day to everybody. I would like to welcome all of you to Nova's third quarter 2021 financial results conference call. With us on the line today are Mr. Eitan Oppenheim, President and CEO, and Mr. Dror David, CFO. Before we begin, may I remind our listeners that certain information provided on this call may contain forward-looking statements, and the safe harbor statement outlined in today's earnings release also pertains to this call. If you have not received a copy of the release, please view it in the investor relations section of the company's website. Eitan will begin the call with a business update, followed by Dror with an overview of the financials. We will then open the call for the question and answer session. I'll now hand over the call to Mr. Eitan Oppenheim, Nova's President and CEO. Eitan, please go ahead.
Thank you, Miri, and welcome everyone to our quarterly conference call. I will start the call today by speaking about our quarterly results and performance highlights. Following my commentary, Dror will review the financial results in detail, including the guidance for the fourth quarter of 2021. Nova's track record of consistent outperformance and strong execution was evident in the third quarter results, with both revenue and profit exceeding our guidance and reaching another record high. Although we are not immune to the various challenges in the supply chain, these outstanding results demonstrate the strong momentum in our core markets and our ability to navigate efficiently in this environment to satisfy our customers' demands. Our record performance over the last 5 quarters also signifies the strength and the agility of our financial model, which allows us to keep expanding production output and investing in new technologies while still meeting our long-term strategy of profitable growth. The impact of multiple technology transitions in chip design continues to drive growth across a broad range of applications. The impact of COVID on consumer behavior, along with the industry secular drivers like data storage, mobile infrastructure, AI, and digital transformation, are now augmented by strategic decisions to redistribute capacity over different geographies in order to ensure supply independence. These elements are creating pressure simultaneously on multiple semiconductor technology nodes across different chip manufacturing lines. While we continue to deliver a solution to the most high-end technology nodes, we also continue to deliver systems to the trailing edge nodes that support the growth of traditional applications. In the exigent environment, we are well positioned to keep fortifying our market advantages as we continue rolling out new metrology solutions. Delivery of a combination of new and traditional platforms to a wide range of fabrication nodes drove record booking this quarter, which increased our backlog significantly for the following quarters. With our current guidance in place for the fourth quarter, and following my comments during the previous earnings call about the potential upside for the year-end, we now forecast the company revenue for the year to surpass $412 million in revenues. This forecast indicates growth of more than 50% year-over-year. Turning now to our business highlights for the quarter, revenue contributions was weighted towards logic across different technologies. While we continue delivering our solution to the most advanced nodes below 7 nanometers, we also increased our delivery to the more trailing nodes across various traditional applications. The strong demand for our logic solutions is reflected in our geographical distribution, with growing activity in Taiwan, China, Korea, and US. We expect this demand, along with new site construction, to continue in 2022 as well. On the memory side, we continue to experience solid DRAM demand with expectations for additional NAND spending as we enter 2022. The growing demand for our portfolio drove several notable achievements this quarter. The first one to mention is the record contribution of our materials metrology portfolio. Against the backdrop of broad demand for advanced semiconductors, the growing complexity of materials engineering has struck a high note in our offering. The next generation devices require a better approach to control different materials properties along with the ambitious architectural design. As complexity increases, inline materials process control in etch, lithography, and deposition become crucial to yield improvement and drive growing metrology attach rates. Nova's strategy to lead this market resonates well in our results as both our XPS VeraFlex and Raman Elipson products were adopted by multiple customers. Beyond the immediate effect on our business growth, the initiative to move more laboratories capabilities to inline manufacturing capabilities resonates well with our strategy as we continue to develop new technologies to allow production fabs to better control of each step of their process. Following this encouraging progress, we announced this quarter 2 major wins for the VeraFlex and Elipson platforms with leading memory and logic customers. These wins represent a solid business potential for 2022 as well. The second achievement to notice is the record income from our software products. Our software standalone portfolio is now implemented by our leading customers and allow them to utilize more effectively the hardware platforms. Combining our physical modeling and advanced mathematical training engines over a connected fleet of tools in various stages allows Nova to achieve better results using a smaller data sets with much greater accuracy and repeatability. We continue increasing investments in these areas, which we view as our most encouraging competitive advantage. The third milestone to highlight is our new service revenue record. In the current environment, customers are investing simultaneously in both extending their existing nodes and expanding into new ones. Revenue this year from services is expected to hit a record high with a wide range of drivers, including upgrades, improved productivity, software enhancement, and advanced service contracts. The growing demand for Nova innovative portfolio in both memory and logic for materials and dimensions metrology pushes our development cadence forward with new products and offerings. Our focus this year continues to be the Prism standalone rollout, the expansion of the materials offering, and the investment in advanced software prediction capabilities. During the third quarter, we made exceptional progress in all of these directions. This direction putting us in a very strong proliferation position towards 2022. A notable achievement in this regard was the continued adoption by several customers of our standalone OCD Prism platform for advanced memory. In response to the surge demand during 2021, we are working intensively to expand our production capacity, which grew more than 60% this year. With growth in all our product lines, we continue to optimize our output around the globe and plan to open 2 new cleanroom facilities next year in Fremont, US, and Israel. As other companies mentioned, we are not immune to the supply chain disruptions in this dynamic market. As materials and chips keep being short, transportation and increasing prices are constantly changing. Yet, as reflected in our outstanding results, we continue to navigate well these challenges in order to extend our growth into 2022. Before I hand over the call to Dror, let me recap my notes for this quarter. It has been yet another outstanding quarter and a milestone for Nova, where for the first time we crossed the $100 million quarterly revenue mark as a direct result of our well-executed plans towards the Nova 500 strategy. Against the backdrop of global chip shortage, the growing demand for our innovative portfolio continues to pave the way to another outperformance year in 2021 and builds a positive and encouraging momentum towards 2022. With that, let me hand over the call to Dror to review our financial results in detail.
Thanks, Eitan. Good day, everyone, and thank you for joining our third quarter 2021 conference call. Total revenues in the third quarter of this year exceeded our guidance and reached a record of $113 million. This represents a 62% growth compared to the third quarter of 2020 and a 15% sequential growth compared to the second quarter of 2021. Product revenue included record software revenue in the third quarter of the year, hitting our target level of 10% of the overall company's product revenues. Product revenue distribution was approximately 70% from logic and foundry and approximately 30% from memory. Blended gross margin in the third quarter was 58% on both GAAP and non-GAAP basis, within the company's target model of 56% to 59%. Operating expenses for the quarter increased by approximately 3% to $30 million on a GAAP basis and to $27 million on a non-GAAP basis as the company continues to increase its global headcount to support the steep growth in business activities. Operating margins in the third quarter significantly increased to record levels, reflecting the financial leverage built into the company's operational model. On a GAAP basis, operating margins increased from 28% in the second quarter to 32% in the third quarter. On a non-GAAP basis, operating margins increased from 31% in the second quarter to 34% in the third quarter. The effective tax rate in the third quarter was approximately 12%. Earnings per share came in at all-time record and crossed for the first time the level of $1 per share. On a GAAP basis, earnings per share were $1.02 per diluted share. On a non-GAAP basis, earnings per share were $1.16 per diluted share. Finally, I'd like to share our guidance. We expect the following for the fourth quarter of the year. Revenues to be between $113 million to $123 million. GAAP earnings per diluted share to range from 78 cents to 96 cents, and non-GAAP earnings per diluted share to range from 94 cents to $1.12. At the midpoint of our fourth quarter 2021 estimates, we expect gross margins to come in at approximately 57%. Operating expenses are expected to significantly rise in the fourth quarter as a result of year-end activities and provisions and continued headcount increase, and reach approximately $34.5 million on a GAAP basis and approximately $31.5 million on a non-GAAP basis. Looking forward into the beginning of 2022, we expect operating expenses on a non-GAAP basis to start from a level of approximately $30 million and to gradually grow as we continue accelerating investments and recruitment in all areas and departments, including expansion and establishment of new and existing offices and clean rooms globally. The effective tax rate in the fourth quarter of 2021, excluding adjustments related to a potential change in tax rate in the U.S., is expected to be approximately 13%. Looking at 2021 as a whole, as Eitan mentioned, we are on our way to a record year with more than $400 million in annual revenues, reflecting more than 50% growth year-over-year. Also, we expect to conclude 2021 with operating margins of around 30%, slightly higher than the company target model of 26% to 29%. I will conclude by noting that cash reserves increased to more than $500 million at the end of the third quarter of 2021, following a positive free cash flow of more than $50 million in the same quarter. With that, I will turn the call back to Eitan.
Thank you, Dror. We will be pleased to take your question now. Operator?
We will now begin the question and answer session. To join the question queue, you may press star, then 1 on your telephone keypad. You'll hear a tone acknowledging your request. If you're using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star, then 2. We'll pause for a moment as callers join the queue. First question comes from Jamie Zakalik from Bank of America. Please go ahead.
Hey guys, thanks for letting me ask a question. For my first question, one of your large peers talked about strong momentum into the first half of 2022. They even suggested their process control system sales could grow somewhere in the 10% range, half on half in the first half. So I'm not, asking for a specific guide, but are you guys seeing a similar momentum into the March and June quarter? And how strong is your visibility given I think your lead times are in a somewhat more normal range?
Yeah. All right. So first of all, regarding the lead times, so lead times for Nova systems today is around 3 to 5 months. That's around the lead time. This is somewhat our visibility for next year. So definitely when we're looking on next year and following my comments on the backlog, although we don't give guidance for more than one quarter, we do see continuous momentum in the first half as well. I can't say right now, and we don't have the visibility to say if H2 will be higher than H1, but definitely it's going to be a growth year for us.
Got it. And then on gross margins, very strong this quarter, but your guide suggests they're down quite a bit despite record revenues. So what are the puts and takes there?
So as I mentioned in my prepared remarks, we are investing a lot in opening new sites globally, also because of the penetration to new customers in several areas, including in Europe, China, and other areas. So as a result of that, some of the expenses are related to the service organization and the spread of our field service engineers globally. On top of that, obviously, there are pressure from the supply chain in terms of cost of materials, deliveries, and this is obviously building up quarter-over-quarter. On top of that, we had in the third quarter, as I mentioned, record revenues from software. This is probably going to normalize a little bit in the fourth quarter, and all these elements together have some impact on the gross margins.
Got it. And if I could squeeze...
and if you can reach them, it's with very high prices. And the third element is when we look on our suppliers, they start to be challenged by the capacity. Okay, so not all of them are big, and some of them starting to see capacity issue. And on top of it, we need to understand that we are suffering from the shortage of chips, exactly like the rest, if we need it for our computers and other controllers in the systems. So this is where we see the challenges in the supply chain. I don't think that this is a surprise, and I don't think that it's different from other vendors. We have the benefits that part of our suppliers are spread around the world, and some of them are in Israel. We have dual source for almost everything, and basically we increase our inventory a lot and we usually buy equipment or materials for 4 to 6 quarters ahead. So we can mitigate that. Nevertheless, there are things that money cannot buy, and we see some shortage. I don't think that it will damage any of our plans for the next few quarters, but it's becoming challenging.
No, I appreciate the color. And again, like I said, the results and outlook obviously show that you guys are managing it very well. Maybe as my follow-up question, you just briefly touched upon it. I wanted to get your take on some of the broader implications for Nova. Gate-all-around is something that's around the corner for the industry. How do you see that both from what you talked about, a complexity and a materials opportunity for Nova specifically? Do you see that transition as being big for both of those market applications?
So definitely the move for gate-all-around or the nanosheets the movement itself is extremely challenging. Okay, it's like you're taking a vertical gate and you make it horizontal, and actually from this simple fact that it's becoming horizontal, you start to see a lot of challenges in the structure itself, and you start to see some physical challenges as well as material challenges. And basically the whole structure, the building of the structure needs different control schemes that you don't see in a different gate technology. So for the logic providers, this transition is a huge complex issue. And then of course you need to create when you're talking about gate-all-around, you need to do it with multiple gates. So the separation of the gates is an issue, the strain is an issue, and definitely when we came out with our portfolio, starting from the Prism, the new integrated, the Ellipson to measure the stress, everything is built in order to measure those challenges. So when you're looking right now in gate-all-around, it will not be like FinFET a dimensional challenge. It will be dimensional challenge, material challenge. And also when you're looking on the material challenge, it starts to be a chemical challenge, and definitely stress, strain, composition on how you build the gate will become a huge issue. So it's playing to our strategy. So we want to be the leader in this market where it's a combination of materials and dimensions.
Great. Thank you very much. Again, correct.
Thanks, Patrick.
This concludes our Q3 call. I would now like to turn the conference back over to Mr. Eitan Oppenheim, President and CEO, for any closing remarks.
Thank you, operator, and thank you all for joining our call today. Thanks.
This concludes today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.